What's up, everybody? Welcome to the Stocks channel. My name is Cory, and this is going to be your daily stock market technical analysis update. Well, stocks went up again today, and the Dow Jones finally formed a brand new all-time high. This is obviously a very bullish sign, and we will talk about what to expect in the stock market over the next couple of months. Before we get into the charts, please smash that like button, and if you're new, go ahead and subscribe so you can follow along with all of my daily updates. First up, we'll take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. First up, if you're looking for a stocks Discord, there is the Stocks channel Discord, which you can find in the link in the description below on this video. I'm on that Discord showing you every single trade that I'm making, and you can follow me with entries and exits. And there's also a community of traders that you can collaborate with. We're trading stocks, options, and cryptocurrencies. There's pretty much content for all types of traders on our Discord. So if that interests you and you're looking for a trading community and you're trying to be more disciplined and more profitable in the stock market, the Stocks channel Discord is absolutely the place for you. So if that interests you, check out the link in the description below and you will get a 3-day free trial when you subscribe. Alright, so let's go ahead and take a look at the SPY ETF, and we see we did have a very bullish day, closing up over 1.6%. And we did get a nice gap up in the morning, and we got that bullish price action back above our resistance level right around that $363 level. So the price action is still bullish, and we still have that strong bullish trend, and we continue to close above our trend lines that go all the way back to 2009 and 2018, which is the magenta line, and the high of 87 in 2000, which is the purple line. Remember what I said, the longer we stay above these trend lines, the more bullish that's going to be for the stock market. So the number one thing to watch on the S&P 500 right now is because we did get this breakout, that is a daily higher high. Daily higher highs are always going to be bullish on the stock market, and we know bull markets are made up of higher highs and higher lows. So there is a lot of bulls in this market, and it's possible we could get a pullback, and we could definitely come back as low as this trend line and close this gap, which will close right around a price target of 358 on the SPY ETF. So while we are bullish, there definitely is the possibility that we need a short-term sell-off and a little bit of a cool-off because we are getting a lot of bulls and extreme greed on the put-call ratios. But it is likely with this gap and this breakout that we are going into that long-term bull market that we've been predicting. So the price action and the trend are still telling us to expect a long-term bull market, but we're going to be realistic here and say that we're not going to continue to go higher when there's extreme greed on the put-call ratios. It's very likely when there's that many bulls buying call ratios, eventually it can't go unpunished and there will be a sell-off going into the close. So by Friday 11/27, if you're heavy into this market and you're feeling like you want to FOMO in, let me reassure you that there's no reason to chase this move. There's always going to be a better buying opportunity right around the corner, and there's no reason to try to buy in now if you haven't been bullish on this market. That's definitely what the FOMO crew does. They chase it at the top, and they can't wait to get in after they see the move already happened. Remember, to be successful in the stock market, you want to buy low and you want to sell as the stock market goes higher. You don't want to chase something that's already happened. You have to take that risk on when everybody else is too scared to buy. That's when you need to start jumping in and accumulating your position. And that's exactly what we're doing on the Stocks channel Discord. We're teaching that type of discipline, and we're teaching you how to become a better trader and know when to enter and exit the stock market trades. So right now, as I said, it's not the best time to be jumping in, and it's likely we could come down and close this gap in a flash, and we could easily see some selling going into Friday, which would bring us all the way back down to 358, and it would close this gap, and we would potentially find support at this trend line. So remember, we are long-term bullish, but we are expecting a sell-off at least in the short term. So just analyzing the price action, you can see we're still way far away from the upper Bollinger Band on the daily chart. We're breaking out to new highs. We have higher highs and higher lows. All of the moving averages are still positive sloping and trending to the bull side, and the price action continues to close above the 5 EMA. So this is all great for the bulls, and it looks like the stock market is going to continue to grind higher. Jumping over to the Nasdaq 100 QQQ ETF, you can see the price action did close right under our resistance level, right around that 294.7 level. Now we did break out of our consolidation wedge, and the price action is closing above the 5 EMA, and we have bullish trending. All of these moving averages are positive sloping, and they're stacked in the bullish direction, with the 5 EMA trading above all of the other moving averages and the 20 above the 50. So it looks like the Nasdaq 100 is going to get ready to try to break through this daily higher high, and we still maintain our price targets on the QQQ ETF of $300, and then above 300, once we break above there, we're going to 312. So those are still our price target 1 and our price target 2. And as you can tell from the price action and the trend, it looks like we're going to get there very soon as we start breaking above 295 here. Now remember, it's possible we need a little bit of a sell-off going into Friday. So look for this breakout potential test of resistance as support and then a bounce, and then we'll start heading to $300. So that support level is going to be somewhere around $290. So from today's close, there is another $4 or $5 pullback that we could expect before we start heading higher. We're still bullish on this market, and we'd see it as a buy the dip opportunity in any event that we finally do see that selling. Remember, when that selling comes, it could be scary and you might not want to buy, but now is absolutely the time you want to start accumulating a position for the long term, because we are about to go into that bull market where we expect to see prices continue to run for many years. Next up, on the Dow Jones DIA ETF, we also got that gap up, and that gap on the DIA ETF will close around a price target of 296.5. You can see we broke to that new all-time high, and we formed that daily higher high as a result, and we're still trading in that bullish formation with the price action above the 5 EMA and all of the moving averages stacked to the bull side. So this is definitely extreme bullishness that we're seeing, and there's a lot of price action showing us that the stock market wants to head higher. So on the Dow Jones, it's fully possible that we do see that selling I'm talking about. We'll come down and close this gap, find support, and then start heading higher yet again. On the VIX, we can see we're still bleeding out, which is good for the bulls because a low VIX means low fear, and in a low fear market, the market continues to grind higher and forms new all-time highs. So we're looking for the VIX to continue to bleed out and start closing below support right around this 21.3 level. As the VIX starts closing below 21, we're likely going to start heading to VIX levels of 18, which is where we were at before the crash when the market just continued to grind higher all through January and February. So low fear is bullish for the stock market, and the VIX is aligning with our bullish thesis. On Amazon stock, we did see a test of our support trend line yesterday, and we did see a confirmation bounce today, and the price action is back to closing above the 5 EMA. So it looks like the Amazon bulls are showing up right on time for Black Friday and the Santa Claus rally, and it's likely that could have been the last time we're going to test the support trend line before we bounce up and come test the resistance trend line right around that $3,400 price target. So we're bullish on Amazon because it has passed the test of holding up above support, and the longer it can start closing back above these moving averages and reversing this bearish trend, the more and more bullish Amazon is going to start becoming. So right now I'm becoming an Amazon bull as we start to see the price action bounce off support, and if we break above 3,400, we're going to start going back into that long-term bull market on Amazon. On Apple stock, we got all the way back down to our top of our gap, and we did find support and we did bounce. However, we're still closing below the 50 EMA, which is not the price action we want to see, and we do see the bearish trend starting with the 5 EMA crossing under the 13. So the Apple bulls need to start closing back above the 50 EMA, and they need to start reversing this bearish trend. It's still fully possible that Apple comes all the way down and closes the gap, which will be a price target of $111.5. On Tesla, we see the bulls are still going absolutely crazy, and Tesla closed up over 6.4% yet again. Remember, once we broke our 522 price target, that level did become support, and our next price target is up here at 575. It looks like the Tesla bulls are going to have no trouble hitting that price target in a flash, but I do expect to see Tesla start slowing down and finding resistance once we get to 575. We could see a pullback from that level, so if you haven't taken your profits on Tesla and we get up to 575, you might want to consider ringing the register and lock in those profits while you're up big. On Nvidia stock, we are seeing some more selling and the price action still below that 50 EMA, but we are back to our support trend line. So this is going to be a real test for Nvidia right around this 515 level. Are we going to see a bounce and a price action close back above the 50 EMA and the 5 EMA? And is this trend going to start reversing from this level? It's too soon to tell, and we don't make any guesses on the stocks channel. We wait and we watch the price action, and if we get that confirmation bounce, we're going to start looking up ahead for Nvidia to start heading back up towards $570. If it breaks below support, we're not going to be a buyer, and we're going to let it start heading lower until it finds a new bottom and a new support level. On Boeing stock, we still see that bullish formation developing, and the momentum is only getting stronger and stronger for the bulls. That 20 EMA is now starting to separate from the 50, which shows us that the bullish momentum is picking up. We did find resistance at our resistance trend line, and we did close above the 5 EMA. So overall, we still have very strong bullish trending and very strong bullish price action on Boeing, and I still call Boeing a buy the dip scenario where you want to buy off of support, which right now is the 5 EMA, and you want to let this sucker run. On Bitcoin, we see the bulls still fully in control, and we still have this huge influx of volume coming into Bitcoin right below our price target of $19,600. So it looks like we're only a few $100s away from hitting our price target, and we're still closing above that 5 EMA, and we still have an extremely strong bullish trend. So it looks like Bitcoin's going to have no trouble hitting our price target, but the question for Bitcoin is, once we hit that level, are we going to start getting a correction and a consolidation before we head higher? I'm going to lean towards the fact that Bitcoin needs to cool off and needs to consolidate a little once we hit our price target, but anything is possible. Like I said, I don't suggest chasing Bitcoin at these levels. If you're not already in Bitcoin, just wait for the next buying opportunity. If you've been in Bitcoin, you might want to start considering taking some profits unless you're going to be long-term bullish and hold for a year or longer. On the US dollar, we see we finally got a close below our support level at 92.28, and that is bullish for stocks. Remember, a weak dollar is a strong stock market, and it looks like the dollar is going to go down for another leg lower. We still have bearish price action below the 5 EMA, we're closing below support, and all of the moving averages are trending to the bear side. So a bearish trend will push the price lower, and it's likely we're going to see the dollar continue to weaken. We saw gold go down to our 1810 support level and did close just below it, and there is one more support level that gold could find right around 1795. But it's likely gold is going to bounce from these levels soon, and I'm looking for gold to hold up on support, whether it's the 1810 or the 1795, and come back up to our 1860. At this point, we're going to find out if 1860 is going to be resistance, which will be our sell point if we're trading gold, or if it's going to break through 1860 and start heading higher. So this is a great trading opportunity on gold, and it looks like it could be finding support soon, and it could have a nice bounce back to 1860. And we did see that we have a weak US dollar, which means gold should be going back into a bull market soon if that's going to remain the case. On silver, we do see it finding minor support at the $23 level, and we are starting to get a bounce on silver. So it looks like gold and silver could be finding support and getting ready to bounce very soon. On the financial sector, we saw extreme bullish price action today, and we still have that very strong bullish trend, which means we have a strong financial sector, which is bullish for the S&P 500. On the industrials, we also had a very strong bullish price action day, closing well above that 5 EMA, and we still have a very strong bullish trend on the industrials. Again, very bullish for the S&P 500. On the healthcare sector, it does look like we're holding up above the 20 simple moving average, and the price action is just consolidating around that level. The bearish trend is picking up a little bit of momentum because that 5 EMA is starting to cross back below the 13. But if the bulls can keep the price action above that 20 simple moving average, it's likely we could bounce off this level, and this trend could go back into a bullish trend as we see healthcare start heading higher. So overall, all of the sectors are still looking bullish, with the industrials and the financials and now even the tech sector carrying most of the load. So going back to the S&P 500, it's still fully possible that we do get a minor sell-off and a pullback back into this gap around 358 before we head any higher. But the moral of the story is the bulls have proven their point. They've formed new all-time highs on closing prices for the S&P 500 and new all-time highs on the Dow Jones, and it looks like the tech sector is only gaining momentum, and it's about to join them soon, also forming new all-time highs. So once we get all three indices forming new all-time highs, that is by far the definition of a long-term bull market, and we're gonna start seeing stocks continue to run. So if you're still bearish on this market, you really need to look at the price action and look at the trends, because a lot of bears are still doubting this move, even though the price action and the trends are saying that this is an extremely bullish market. Of course, anything can happen, but we trade off of technicals and data right here on the stock channel, and we're doing objective analysis. We're not trying to speculate and guess on what might happen. We're strictly following the price action and following the trends and letting our money go to work to make more money for us. Remember, there's nothing wrong with having some cash if you're unsure and you just want to wait to see what happens for a while longer. It's always okay to just go into cash and wait on the sidelines. I only would say if you're in cash, don't go running into the market and don't FOMO in at the top. It is possible if you stay in cash too long that eventually you'll get fed up watching the market go higher, and you will buy in at the absolute worst time. So keep your emotions on the sideline, and if you're in cash, just be patient and wait for that buying opportunity that you're waiting for. Don't be the bear that FOMOs in on the top and try to play the direction of the market at the exact wrong time. Just be patient, wait for that next opportunity. If you missed out on this move, there's always going to be another opportunity. Remember, if you're not sure how to trade this market, there is the Stocks Channel Discord, and you can find out how to join in the description of this video below. Thanks for watching, everybody. Please remember to help me out by smashing that like button. And if you're new around here, go ahead and smash that subscribe button so you can follow along with all of my daily updates. Good luck out there, everybody. And as always, I will see you in the next episode.